up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or a stock you want to go over get together live, leave it in the comment section below. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, let's check out our open positions, see what we got. First up, we had our short put spread for April on UNG fill this morning. We'll go over that one in a second. There's a Treasury bill auction tomorrow, so this one's being queued up. Have a short put on Alcoa trying to get to 19. Right now, Mark's at 24, so we're on the right track there. We're trying to roll from March to April our short call spread on the semiconductor ETF. We're right now bid is 0, Mark's 25, so we got this one open for the next couple weeks to see if we can get it to roll. If not, we'll take the loss on that one if it doesn't fill. Just buying some more time for a credit of 0. Newmont short put, down marginally on this one. This one is April expiration. And then finally CCJ short put, trying to get to 18. This one is also under a bit. But again, we've got some time till March and April expiration, okay? Why don't we go over our UNG trade really quick. This one was a fast one, in and out in a couple days. 23rd. On this day, the 23rd, I think, yeah, it was the 23rd. We sold a put spread, not a put. So we sold the 10, which is way down. Sorry, we sold the 12, which is right here, and bought the 10, which is right here. So it was a $200 spread. Received a credit of $24.25, and we made $12 on that. So if you take your calculator out, $12 divided by the $200 spread, 6% return there. Thanks, I think it was Bill who recommended this UNG, the Nat Gas ETF. All right, so good move on that one. In what, 2 or 3 days? In and out in 2 or 3 days, okay? Cool. All right, let's look for some new opportunities. This being the last episode before we take a pause, just so you know that this portfolio won't be updated every day. Just as things happen, I'm going to take care of them on my end since it's my portfolio, okay? First up, TJX earnings up marginally. Earnings this morning. Not much of a mover on this one. I would prefer it to be down more so, but not going to be much to do here. All in the positions still are April expiration. You got red on the put side and red on the call side. That means that it's too late to open a position now post earnings, okay? Yeah, skip this one. You don't get paid for it. Next up, CPNG. Up 4%. This is post earnings as well, I believe. Yeah, yesterday after the close. Let's take a look. Here's your chart. Gapped up and has already sold off a bit. Opened up at around 18 and selling off. And let's see. Yeah, that makes sense. Hit this resistance from back here in August of last year. And sold off. Next spot for resistance is around, let's say, 1875 or so. All right, call side. If you could still sneak in, you'd have to sell the 20. You get $28. You'd have to sell 20 and buy 22. Let's do the math. Doesn't look like it moved big enough. So 28 minus 9 divided by 2 divided by 200. Yeah, only 4.7%. So skip this one. Good liquidity, but not a big enough move post earnings to make it worth it. Okay. Next up, Coinbase. This is just Bitcoin play. I think Bitcoin is up over 60,000. It's up 7% today. So with some of these names, you're just going to have movement with Bitcoin. Earnings for them are May the 5th, so we don't have to worry about earnings. Big move up into earnings, and then post earnings, it sold off a bit and moving up again. This is all Bitcoin related. So resistance at 208, which is right now 208, all the way up to 226. So if you want to sell the call side, obviously move past 226. Liquidity is not the best here either, just because it's so big. A lot of action at the 300. You could go a little closer, sell anywhere between the 280 and the 320 as your short side. I guess the right in the middle then would be the 300. That makes sense. So if you sold 300 and bought 310, what do you get? 962 minus 845 divided by 2 divided by 1,000. That's 5.8%. Let's just call it 6%. That's not bad. And it moved past, what was it, 226 I said? So the 300 on the chart. 300 is way up here. And considering we're post earnings, that seems very fair. If you sold the 300 and bought the 310. So 300, if you look back at the chart, is right about here. There's even more resistance at 300. So I might take this one. Liquidity is okay. You sold 300 and bought 310. Let's give it a shot. So it's going to be $1,000 spread on this one. Above normal volatility. Go to verticals. Set this as 10. 300, 310 right here. Actually, that spread is wider than I thought it'd be. It's a 60, 130 spread. Oh, man. Maybe not. Never mind, I'm going to stay out of this one just because it's a little too illiquid. All right, sorry, moving on. Let's look at UNH. Health insurance provider. Being investigated by the DOJ, so that's hurting them down 5%. Maybe we have an opportunity to get in here and sell the put side. Earnings are April 12th. Today is February 28th, so we have more than a month to have this one come out on our side. I'll be honest, I didn't really read the report, so it's just the headline I'm working with. At the low of the day, too. Put side for April. Above normal volatility, everything's looking good. Downside, you'd have to sell the 440. You get paid 417. That's actually not bad. You'd either buy the 420 or for the 430. Or to make it cash secured, you need $44,000 in your account. I like the liquidity at 420. Actually, no, I don't. Liquidity here is tough. Not a lot of volume. Take a look at March really quick. Yeah, just as bad as in March. Damn, this one's close, really close. Everything on this one is perfect except the liquidity issues at the 440 strike. 440, 430. Where's 440 on the chart? 440's down here. That seems fair. I'm actually going to put this one on the list to follow up with. If it gets down to 460, sell the put side. So obviously we're not going to follow up together, but if you're continuing on your journey, UNH 460. All right. So there's that. Very interesting, this one. I like this one. It's just a game. The DOJ is not going to do anything. Next up, Apple, AAPL. Apple had some news out this morning that they're going to bring to an end their EV vehicle project. So that project's done. Down marginally because of it. They're going to redistribute some of those workers in other fields. Earnings for Apple are May 2nd. Volatility-wise, not much going on here, so this may be nothing as well. Slightly above normal across the curve, but not much. Put side. The 170 is a little close, and the 165 is too far out. The 170, good liquidity here. All the action's happening at 170. You can get paid $140. The 170 on the chart is right here. Seems fair. It's Apple. Let's move on. Not as exciting as I thought it'd be. Baidu, post earnings, I believe, down 6% or so. Tough chart. It's been range bound. You can make the case for continued movement down. So today before the open, let's take a look. Below normal volatility now, so this one's not that great. Put side, you'd have to sell the 90. Actually, there's still some good pricing here at the 90, but liquidity looks to be a bit of an issue. It's not bad. It's not great, though. You got a 9-cent, 10-cent spread here at the 90. That's okay. Call side. Sell the 120 and buy the 125. The 120 is a little close here. Let's see if you did the 125, 130. How about that? 145 minus 95 divided by 2 divided by 500. 5% on the nose. Interesting. If anything, put side, sell the 90. Where's that on the chart? That's right here. That seems too close. I'd hold on this one. NVAX, Novavax, post earnings, I believe. Yeah, okay. Steep cuts. Okay, here's your chart. Yikes. Not good, so be careful selling the put side here. You'd have to go out to the 2.5 and it's only get paid 7 cents. Close on this one. Call side, I'd skip the call side. You have to skip the call side. Okay. Next up. Devon, DVN. I forget what the news was here. Maybe earnings. Yeah, earnings yesterday after the close. Doesn't seem to be much a move on this one. Let's take a look at the chart. Yeah, not much. Put side, you have to sell 40, you get 40. That thing's perfectly priced. Call side, you have to sell 50. I'd skip the call side. You don't get paid for it. Next up, eBay. eBay had a good quarter. That's weird. Maybe call side on this one. Deutsche Bank, price target to 55. It seems a little high. What else we got? BMO maintains at market perform. Price target 53. Okay, neutral. Chart-wise, it looks like it's found some footing here. We got an ascending trend line. We got higher lows. We also have a descending trend line with lower highs. So you could make the case for selling the call side here. Get in and out really quick. You'd have to sell 52.5 and buy 55. The liquidity's okay. Let's do the math. If you sold 52.50 and bought 55, what do you get? 37 minus 16 divided by 2 divided by 250. Just about 4%. Not really worth the squeeze, okay? Close one on this one too. Next, Beyond Meat, BYND, up 45%. All right, earnings. Obviously want to sell calls on this one. Could run up all the way up to 15 though, so keep that in mind. Any news? BMO, market perform. Yuck on this one. All right, let's look at the call side. Okay, so with a 45% move, you see how the implied volatility is still high. That means whatever the option market was pricing in for an earnings move was higher than it was lower than 45%. So this is one of those examples where the stock has moved post earnings more than it was priced in the options market. Okay, so that's kind of what we're looking for post earnings. Remember Palo Alto earlier this week or last week? When it moved down 25%, that 25% down move was more than what was priced in the options market for earnings. So same here with Beyond Meat on the call side this time. So you'd want to sell 18. Ah, son of a gun. Your 18 spread is 42.93. Maybe you can get away with selling the 20. There's liquidity here. Hi. All right, unfortunately, this is the perfect example of what you want to do post earnings selling the call side. The only problem we have is liquidity. It's too illiquid. And I don't recommend selling calls naked. Always cover your call selling. But this one would have been perfect. You'd have to sell the 18 and your spread is 48.93. Too illiquid. On the put side as well. Look at this, 9.1 thousand. So on the 5. But you'd want to sell the call side here. Unfortunately, liquidity is too much of an issue. We're going to have to skip this one. Close. Damn, this one was close, but no cigar. SJM Smuckers. I think they got an upgrade today. JP Morgan maintains it neutral. That's not it. Citigroup trims price target. Buy. Barclays raises price target to 132. Okay. Stifel upgrades here. So it's an upgrade from Stifel. Earnings yesterday. Looks like a nothing. Pass. Too illiquid. Next up, Dell. DELL. I'm not sure what the news was. Was this maybe earnings? Earnings are on the 29th. So earnings are tomorrow after the close. Obviously, with us going on hiatus today, we will not follow up on Friday. But if you want to follow up on Friday, go for it. I will if I find some time during the day. But buy rating from Loop Capital initiates coverage on Dell right before earnings. Put side for earnings. Skip. Too low volume. But the upgrade from Loop. Starbucks SBUX. What was the news out of Starbucks today? Oh, something about meeting with their union. Yeah. Open discussions with union representatives. They're going to agree towards bargaining. Great. Not moving the market too much. Okay, earnings. I think we're past earnings. April 30th, so we're okay earnings wise. Put side, you'd have to sell the 85 and you get 34 bucks. Skip it. Call side. The 100's too close and the 105's too far out. Next, Viking VKTX. This is a follow-up from yesterday. Remember, we were waiting for more strikes to become available, which there are now more strikes available. You see how there's zero open interest? That's because now we have more strikes to trade. But it looks like volume-wise, still too illiquid. So that you remember yesterday they had their phase 2, something went well, obviously. Up big yesterday. Now up big again today. Got up to almost 100. And obviously shareholders will be selling into an event like this. Call side, we still don't have enough strikes. You'd have to go out farther than selling the 135. You see, since it's as far out as you can go right now, and it has the most volume. And this is probably institutional selling. Don't sell this naked. Put side, you'd have to go out to the 39 or so. Too illiquid, 110, 170, too illiquid. Okay. Interesting though on this one. Next up. Well, that's it for today's list. Let's look at some follow-ups. Carvana CVNA waiting for 100. Not there today. Had a good post-earnings move up. But 100 is the first stop for resistance. Not there yet. I'm going to keep following up on this one as well. If you want to as well, go ahead. But today's not the day. Not yet. Next up, the IWM. Want to sell the call spread at 210, down slightly today. I still believe we're going to break up above this and get up to 210. Now sell the call spread there. So that's that. Not yet today. Okay, Roku at 60. I think the move on Roku's been made. You would have wanted to sell puts. We tried to open a put spread back. I think it was on the 22nd. It didn't get filled. And I think at this point the move has been made. I'm taking Roku off the list. All right. Apache one last time. APA. Looking for 28.50. Not there. It's close. I have to hang on tight till it gets down to there. If it gets down to 28.50, I'm going to sell the put side. Cool. All right. Let's go through our IV rank scanner and sort by volume one last time. Again, let me show you really quick. The website is called Market Chameleon. And the web address is marketchameleon.com/vol reports/volatility rankings. Okay, so if you want to take a screenshot, get your camera out and take a picture of this, this is what I'm using. It's free. You don't have to pay for it. I don't even think you need to log in. Okay. And sort here by volume. And so we're looking at IV rank 30 and looking for anything that's either red or orange, okay? Beware of the earnings column here. Beware of the stock price here and the percentage move today, okay? That's what we're looking for. Also, really quick before we jump into this, if you do use E-Trade, one of the volatility scanners I like to use on this, if you go to markets, so markets, live action, you'll see there's a volatility tab here. Click on volatility, and we're looking for the 90-day. this one here. So there's two of them. There's the 90-day average HV and the 90-day IV. We want this one right here. So we want the 90-day average historical volatility to be less than the current 90-day IV. Okay, so that's this one. You'd run it and then sort by mark, and it'll give you in order here by price volatility. Okay, so back to this one. First up is Nvidia. We're post earnings. It's a little too big, being a $775 stock, but we're also short the semiconductor ETF, and Nvidia is the highest holdings in that one. Okay, the IWM we already went over. Marathon Digital. Let's take a look. Oh, sorry. So their earnings are today after the close. Tomorrow morning. Good luck. Next, Beyond Meat. We already looked at that one. FXI China. So we got Baidu this morning. FXI is down 3.2%. Let's take a look. FXI. Down, but it's not down in the sense of, so for stuff like this, you want to wait for a big move down and then sell the put side, or continued move up to, like, say, the 200-day or resistance right back here at 25 and sell the call side. Sometimes we're just hanging out in the middle here. There's no clear direction. It could easily continue this journey up, or this could be a start of a next leg down. I don't know. No one knows. The options market doesn't know either. So at that point, there's no edge you're going to find, I guess you could say. Okay. AMD, same thing. We already have semi exposure. Coinbase, you already looked at. SoundHound, no, $6. AMC today after the close. Right. Palo Alto still has some volatility in it. Surprised by this one, honestly. Pan W. Maybe we can get in again. Nah. Where did it hit? It must have hit resistance from back here on January 17th and bounced off of that one. It didn't get up to right here, which I would have expected it to. All right, well, we sold the puts, got in and out. I think the move's already been made on that one. Baidu, we already looked at. Robinhood, nah. Too big. First Solar. Let's take a look at First Solar. FSLR. I think they had earnings. Yeah, earnings were today. Looks like they gapped up and already sold off. So the move on this one's already been made. These solar companies are wonko. They're hard to trade. We traded Enphase before. That one usually has the highest volatility. But if you want to talk about legitimate companies, First Solar's the most legitimate. Spreads here, okay. Let's look at Enphase really quick. ENPH is the ticker. Enphase, similar. We're gonna think pass on these. FSLR, earnings for them just happened, so not a big enough move to make it worth it. Okay, next up. eBay looked at Rivian. No, we're done with Rivian. Clean Spark. Viking Therapeutics we already looked at. ARM. Looks like our second attempt at a breakup is over. Can you sell the call side yet? Or get back in? You'd have to sell 180 to a liquid. This one's fascinating. Next up. Fisker. Nope. The GDX, no. Novavax, we already looked at. Micron, March 20th. About 3 or 4 weeks out on that one. Boeing, skip. The KRE, sure. How about we look at the KRE one last time together? I would wait to get down to like 45 and sell the put side. Not yet. Let's look at the TLT. Same thing. Kind of in no man's land here. Wait for a bigger move up to say around 95 or so and sell the call side. Or wait for a bigger move down, like say breaking down below here. It could do that and sell the put side. But as of right now, goodbye TLT. Toast. Norwegian still has a little bit. We'll pass. UNH we already went over. If UNH gets down to 460, I'm going to hop it and sell the put side. Taiwan Semi, no. Lemonade, no. Snowflake is today after the close. So check it out tomorrow morning. Salesforce today after the close, same thing. Check it out. Carnival. We looked at Norwegian over the couple days. Let's look at Royal Caribbean really quick. RCL. Sorry, earnings. May. Volatility seems pretty normal. Put side, you need to sell. You need to sell at 105 and you get paid 100. Fairly priced. Nothing to do here. Next. Paramount after the close. Endeavor was before the open today, but it wasn't a big enough move, so he skipped it. Skip Pfizer. Coupang we already looked at. Plug, no. Advanced Auto Parts was this morning. I checked it out. I think it was too illiquid. That's why I didn't make the list. Lyft. Down 4%. Let's take a look at Lyft. We traded Lyft a week or two ago. I can't remember what we did. Yeah, so we must have sold a call spread on Lyft. And we made our money. Right now, though, we're obviously past earnings, so we don't worry about earnings right now. Down 4% today. I don't know why this one's on the list. An insider sold some shares back on the 23rd. That was a while ago. Let's take a look. I think this is a mistake. Put side. The 13 pays 29. That's okay. Call side. The 20 pays 38. Volume there. Some volume at the 20. That's interesting. If you sold 20 and bought 22, let's do the math. 38 minus 19. Divided by 2. Divided by 200. It's 5%. Skip it. Penn. American. No. No. Skip. Skip. XBI. Pass. TJX we already looked at. I think, just for notes, I know we already looked at TJX. I think the conference call doesn't happen till 8 a.m. So you could still maybe sneak in on this one. I forgot about that. TJX. I'm pretty sure the conference call on this one hasn't happened yet. So there could still be some good movement on the stock during and after the conference call's finished. So maybe the move hasn't been made on this one yet. Oh well. Call. $11 a.m. today. Okay, so yeah, right here. At 11 a.m. today, they'll have the conference call. 11, 10, 9. So that's 8 o'clock on the West Coast. This call hasn't started yet. It starts in 10 minutes. So, you want to hang tight and wait for that to happen. Next up, GameStop. No skip. Match Group, no. GE, no. JD, maybe. HYG, pass. Pure Storage, today after the close. Pinduoduo, we already looked at. No. We looked at Baidu, but I'd skip Pinduoduo. The K-Web. SMH, we're already in that one. XPEV, no. Moderna. UNG, we're already out of that one. I'd skip it. You already missed the move. TNA, Eli Lilly, Path, Enphase, we already looked at. Virgin Galactic had earnings this morning, but it's too small of a stock. Lucid, Applied Materials. Macy's. Let's take a look at Macy's, and then we'll go to one more scanner on E-Trade and then call it for now. If you have any questions that you want to go over, start asking them now so we can get through them all. Anything you want, okay? Macy's. Day 2 after earnings. To shutter 30% of its stores. That's not good. Today, JP Morgan raises the price target to 23. That seems a little high. Morgan Stanley trims to 20. That seems more appropriate. All right. We traded Macy's before, both before and after earnings. This one wasn't much of a move, so it's kind of hanging out in the middle of nowhere. Put side. 16's a little close. I don't know if I'd want to sell the put side. Call side, you'd want to sell 23. What is your approach to risk management? How much of your total account do you use for options trading at one time? Individual position sizing, etc. So for total account, you want to have at risk no more than 5% of your total amount of the portfolio. For example, if you have a total account value of $10,000, you want your spread to be no more than $500, okay? So say you got $10,000, and it could be tied up already. It doesn't have to be straight up cash. $10,000, you'd want to sell the 15 and buy the 10. That gives you a spread of $500. That's risking no more than 5%, okay? So try not to go to more. Ideally 2 or 3, but that's a lot for smaller accounts. If you've got a $100,000 account, no more than $1,000 spread. I'm sorry, 10,000. Or no, sorry, 500. Hold on one second. Sorry, not enough coffee today. $5,000. Okay, so if you have a $100,000 account, no more than $5,000 going to per trade. So how that would work, let's look at Disney. If you sold the 130 on the call side and bought the 140, you have $1,000, and then you can do 5. So you can sell 5 calls at the 125 and buy 5 at the 135. That gets you to $5,000. Okay, and so you're just growing up that way. As far as risk management goes, in general, it just depends. So depends on for the put side, if it's a spread or if it's just a straight up put. It also depends if you want to take ownership of the stock itself and you want to keep it, if you want to sell calls against it, if you want to collect dividends, if you want to move it to another portfolio. That depends. On the call side, though, that's different. Call side, you never want to take the short 100 shares if a spread expires halfway in the money and halfway out of the money. So if your short strike expires in the money and the long strike is out of the money, you don't want to get that short 100 shares come Monday morning. So you don't want to close it out ahead of time. And then with the call side, part of your risk management is always selling the spread. You don't want to sell naked calls, okay? I know we talk about a bunch, but make sure you look up optionsellers.com and what they did when they sold naked calls on nat gas. They went under because of it, okay? So a good lesson there. Always learn from other people's mistakes, okay? Good question. Go to markets here. Let's see if there's a couple more here. MicroStrategy is too big. Duolingo. DUOL. DUL. All right, so earnings for them are the 28th after the close. So earnings are today. We'll have to skip this one. Abercrombie and Fitch, A&F. Let's take a look. I know they had a monster rally chart-wise. Thank you. Lacey says, thanks, Steve. Thank you, Lacey, for you helped us with that short call spread on JP Morgan's earnings back in January. So thank you, Lacey, for your help on that one. Good recommendation. And thank you for tuning in. I appreciate it. Bill says, also, I've learned so much from you. Thank you. Good luck with your big projects. I hope to see you again soon, too. Me, too. This is not the end. I definitely will be back. The company I work for, we're having a bit of some issues at multiple locations, so I'm going to see if I can focus all of my time, all of my energy in getting our company back in line. I think it's worth it, and I'll be back once things kind of settle down. I'm guessing we should be looking good around May. I'm hoping. Yeah, we need to right the ship fast here. So I appreciate everybody, all the donations from, oh my goodness, from Bill, from Greg Proops, from Oliver Stone, I think Lacey as well, thank you. Good questions from everybody, from AKA, from Bill, everybody. Good content, good discussions all around. I hope everyone has learned something. Even though we're not doing this live anymore, you can go back and watch older episodes and just see the format over and over again. It's just the same shtick all over again. Okay, Abercrombie and Fitch. Their earnings are March 6th. Too close to earnings. But if you look at their chart on this one, actually, Lacey, if you thought the same thing about the JP Morgan trade, you would definitely think the same thing about Abercrombie Fitch selling a call spread into earnings on this one. Remember, JP Morgan had a very similar chart going into earnings. We sold the call side. A&F going into earnings. The problem is we're a little too far out for picking a strike because earnings aren't until the 6th. You would need to look at like the day or two before to pick your strike. At this point, you can't tell what the strike is going to be to sell for your spread, okay? Pam, just found your channel. I hope to learn more about option spreads. Thanks for sharing. Thank you, Pam, for tuning in. If you guys want, set alerts, like and subscribe, all that stuff. So that way, when I do come back, that morning when we come back, you'll get an alert that we're going to go live again, okay? So thanks, Pam, for watching. We've got some episodes that go really far back. I think I have the past 6 months always available, and I take the previous 6 months down just because there's so much going on. So I think January, December, November, October, September, I think August and September still available, and then going forward, and then August will eventually fall off. Okay? Just because last year, previous years, trades don't really make sense anymore. Because we're in a different market now. But yeah, we should be back soon. Don't worry. Couple more here. No, Bitcoin, no. Double verify. I saw this one on the other list. I've never heard it before. DV. The 28th after the close. I wonder if something got leaked or pre-announced because it gapped down big today and really rallied back. So I wonder if something got leaked or they pre-announced their earnings, or maybe this isn't accurate. Maybe it was before the opening today. Anything else? Clean Spark, Riley, Chewy. Looked at Chewy, I think, yesterday. Nothing to do there. Riot. Beyond Meat, we already looked at. A lot of these Bitcoin ETFs coming up now. Big Lots. We're getting desperate now. All right. 8 o'clock. Any other questions? Any other tips? Anything else? We'll hold on here for a couple more seconds, then we'll call it. All right. So my thinking to wrap up this portfolio, since you're not going to see how the rest of this plays out. CCJ, let's go over everything. CCJ. I sold a short put, not the spread, right here at the 40 strike. If this continues to move up, this position will close, and I'll be fine. If this rolls down, if this keeps moving down, I'm not going to roll it. I will take the $4,000 worth of shares, and I'll keep it. Dividends okay on this one, but long term, as in over the rest of my life, uranium is going to be a big part of our society. So I wouldn't mind holding on to this and putting it into another portfolio. And since I have 100 shares of CCJ, if I really want to, I can sell calls, not call spreads, just calls against this and make a little bit of money on it. Okay? So that's that. Newmont, let's take a look at Newmont. Newmont is going to have the same strategy as CCJ. So Newmont is the biggest gold and silver miner in the country. They sold the 27.5 strike here on the day of earnings, I believe. So it's just like CCJ. If this thing moves up, this position will fill, will be out of the trade. If it moves down and expires in the money, same thing. I will not roll this one. I will take ownership of the shares at $2,750 worth of stock. And same thing, dividends on this one. Good, 5% dividend on this one. And I'll just put it into a different portfolio, hold on to it. Maybe sell calls against this one too, but you don't see it here, but I actually have a position of stock in Newmont, so I'll just add it to it, okay? So that's Newmont. The semiconductor ETF, this one is a bit of a buzzkill. So, trying to roll it. We sold the 200 and bought the 205. As far as expiration goes, March still has 16 days till expiration, okay? So this call spread is in the money. As you get close to that Friday expiration, if this spread is half in the money and half out of the money, I will close it on that Friday. If it's completely in the money and hasn't rolled, I'll take the loss. But not if it does move back down, odds are this roll will continue, and I'll keep rolling it until I make money or take the loss, okay? Alcoa. Alcoa is the same as CCJ and Newmont. So at 25, on this day here, we sold a short put at the 20 strike. Is that right? No. Oh yeah, no, it is at the 20 strike. Okay, so same thing. If this thing moves up, we make our money. If it moves down, I will take 100 shares for $2,000 worth, and I will collect a dividend of 1.5%. I can sell calls against it, or I can just hold on to it for a later date. Over the next, I don't know, year or so, we should head into recession. And when we head into recession, Alcoa is a aluminum company. So this is going to drop like a stone if we go into recession. I know that going into it, I'm fine with that. But as we come out of recession and we'll have to print a ton of money, all these commodities are going to go crazy through the roof, just like it did back when we printed a ton of money in 2020. So we printed a ton of money in 2020. Alcoa went crazy. It went all the way from $5 a share up to almost $100 a share. When you print money, commodities go up. Okay? That's my thinking on that one. So if I own shares of something, it's not trading, it's investing. So it's over the long term. All right, so that's Alcoa. UNG got filled today. And then I just have a bunch of T-bills that I keep rotating in and out. So that's that. Final thoughts, final questions, going once, going twice. Again, thank you to everybody. Thank you to all the viewers. Thank you to all the donations. Thank you for people that followed along every day. I really do appreciate it. It means a lot to me. I've been trading options since 2014 or 2015, I believe. It's been a lot of fun. I know you can tell, but sometimes this is very boring to me, and I try to make it as entertaining as possible, but it really is. It's just numbers, and it gets to be just the same shtick over and over and over again. But if you're new to trading, have fun. I hope you learn a lot. Don't give up, and don't blow up your account, okay? Even if you have a small account, don't blow it up. Don't buy out of the money options as an investment strategy. You will lose the majority of the time. And that's why selling options out of the money the right way will make you money over time. All right? Good luck to everybody. Thank you so much for watching. I appreciate everybody. Have a good one. I'll see you when we come back from hiatus. Thank you.